Let's move on to combined motor holdings. It closed with a market cap of 1.1 billion rand, a lot smaller than Imperial and Barloworld. It holds franchises for the sale of brands like Alfa Romeo, BMW, Fiat, Ford and Honda. The group also offers financial services including full maintenance, leasing and insurance on vehicles sold. Today the stock rallied 4%. I don't know what drove the stock price, but it is sitting with a year-to-date gain of 22%. But if you look at their earnings over the past year, they have been battling at a time when vehicle sales have actually increased. Why is that so?
Yeah, certainly. If you look at the report itself, it states also that they've actually sold less cars in the second-hand market where their profit margins are better. So that was the hampering that they looked at. But certainly very cyclical as well. It's a very difficult business to be in when markets go down. They got about a 2.5% at current levels, which is probably some of their best earnings. 2.5% margin is very little to work with for a company and very little to go wrong with to go into the negative. Yeah,
that is a big concern. Paul, what are your thoughts?
Look, we loved this business back in 2007 because, like I said earlier, we're looking for businesses that can really, grow exponentially. So we had quite a close look at it then, and we liked what we saw. We saw Jeb McIntosh. So it was built up out of a network of car dealerships, and they'd focused on the top end of the market, initially Volvo, BMW and so on. Things were going magnificently. Manley Zimmerman, one of the founders as well, had got about 40% of the shares. He's the non-executive chairman. So we thought, well, maybe he'd be interested in relinquishing his stake. They'd expanded into the motor and boating, through Waterworld. Then they had the Dollar Thrifty car rental business. Everything looked fabulous.
Bike shop, boat shop as well, as you say. They've got a few other motoring aspects to their
I think
business.
they had investment cars or Bloomsbury's or something, so they had it all covered.
Yes, investment cars, yeah.
But this thing got absolutely crushed in 08-09 because clearly people stopped buying cars and everything just ground to a halt. The margins evaporated. So they didn't actually make losses, but earnings basically got crushed. They did a consolidation 10-for-1 of the shares as well, so they confused everybody. I don't know what to say about it other than that, as I said earlier, South Africans love cars and they have themselves positioned both in the aftermarket and the new vehicle sales thing. So it's a pure play motor industry. We know that the dealerships all totally overinvested in all these glossy glass and steel buildings around the off-ramps around the country.
You've seen a lot of them closing as well.
Yes, so now they had to turn them into furniture stores and so on to try and salvage the situation. But I think this is a fairly conservative management team. The problem is that it's just very illiquid. It's only got a 1.5 billion or 1.1 billion rand market cap. The average trade is 60,000 rand a day. So if it moves up 4% in the day, that's because one person decided to buy them. So unless you are really a petrol head, motor nut, and you want extra car exposure in your portfolio, it's probably too risky for most ordinary investors.
So I'm guessing a not. No.
No, I guess not, but I'm quite tempted.
Tempted? Are you tempted at all at 11 rand?
No, not at 11. Yeah, it's very cyclical, and you can probably pick it up much lower if
would you be picking it up at a low price?
Well, I think you can probably pick up better quality companies when the tide does turn. So I would probably stay away at these current levels, and unless it offers seriously attractive valuations against its peers, I would not look at it.